Okay, hi everyone. So welcome back to FP Markets, right? Just before I start, can you guys hear me clearly and can you see my screen? If you can you please just put yes under the questions tab? Okay, so we'll wait for about 1 to 2 more minutes for more people to stream in. So for today, we'll be covering on trading with RSI, right? So RSI is a relative index. Okay, so along the way, if you guys have any questions at all, please don't hesitate to put them under the questions tab. I'll do my best to answer them. Okay, so hello to you, Chandrik, as well as Adam. Okay, so thank you for the feedback. Okay, so and to the rest of you guys, right, for those of you guys who just joined, welcome. So I'll wait for about 1 to 2 more minutes for more people to stream in before we begin. Okay, I have feedback by by Tong Heng, cannot see. Okay, the rest of the participants, right? Can you guys see my screen? Okay, so most of the people, right, that I'm getting the response is that they can see. So Tong Heng, you might want to exit, right, and enter again. Okay, so thank you, Fana. Okay, so you should be able to see the trading with relative strength index, right? Okay, so Tong Heng, you might want to try and exit and enter again. Okay, so let's begin. Okay, so just before I start, right, just a few housekeeping matters, right? So disclaimer here, right? So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. FP Markets does not give any warranty or representation as to the accuracy, reliability, or completeness of the information contained in this material. Examples included in these materials are also for illustrative purposes only. To the extent permitted by the law, FP Markets and its employees shall not be liable for any loss or damage arising in any way, including by way of negligence, from or in connection with any information provided in or omitted from this material. Features of the FP market products include applicable fees and charges outlined in the product disclosure statement. Okay. So for today, right, those of you guys who just joined, we will be covering on RSI, which is also what we call the relative strength index. So this is the agenda that we will be having for today, right? So for today, I'll give a brief introduction to RSI, right? So what is it used for and how we can help how we can better understand RSI and help use RSI to help us in our trading. Then I'll also move on to cover the trend lines on RSI, right? So we can talk about RSI breakouts, right? So how we use it to help us to identify if there's a breakout in a trend and potentially a change in the direction of the trend. And then finally, right, on RSI, we'll also be covering on bullish and bearish divergence and how we can use divergence to help us to identify the change in trend. Okay, so again, those of you guys who just joined, right, if you guys have any questions along the way, please don't hesitate to put them under the questions tab. I will do my best to reply them. Okay, and then afterwards, I'll also hop on to real life chart examples. So we'll try to find all these trend lines on RSI as well as divergence that we have discussed. Okay. Okay, so this is just a brief introduction to RSI, right? So RSI, it's also short for Relative Strength Index. Okay, so what exactly is a RSI? So RSI, essentially, this is a technical indicator that is used to measure the momentum of prices. Okay, so it's used to measure the rate at which prices rise or fall, right? It can be in stock prices. It is also applied to, for example, FX trading, okay, so in the Forex market as well. So RSI, it's also developed in 1978. So it's actually developed by this guy called J. Wells Wilder Jr. Okay, so essentially what we want to use RSI, it's to help us to identify overbought and oversold regions. Okay, so when, as the name suggests, right, when prices are in an overbought area, okay, so when prices are in an overbought area that we see here, okay, so when it's in an overbought area, let me just draw this, okay, so in an overbought area, right, can I just hear from you guys, right, what are we expecting prices to do after? So when prices enter an overbought area, what are we expecting prices to do? Do you think that prices are going to go higher, or is it going to reverse? Okay, so I have yes. Okay, so perfect, Adam. So Adam said that prices are going to fall, right? So the idea, right, over here is that when we try to understand when prices enter an overbought area, think of it as prices are the demand for this, right, it's much higher, okay, so there is a chance that we could potentially see a reversal. Okay, yes, you're right as well, Chandrika, right, so yes, we are expecting prices to reverse. Okay, so this, right, it's in an overbought region. Okay, so how this helps us in our trading is that if we load any chart that we have, right, and we open up our RSI, okay, we can potentially see RSI entering an overbought and oversold region. Okay, so when prices enter an overbought region, that is when we could potentially expect a reversal. Of course, we're not just solely trading based on RSI, right? So we also want to take note of other indicators or even key levels that we have. So ideally, as much as possible, right, when prices enter an overbought area, right, we want to see prices testing, for example, a key resistance as well. Okay, so if you see something like that, or even reversal patterns like double tops, that's when it gives us more confirmation that we could indeed be seeing a reversal. Okay, so the reason why I wouldn't trade just purely on RSI, overbought and oversold signals, is because it can generate a lot of false signals, which we will be discussing later on as well. Okay, so this is essentially what we're expecting, right, and how we can use this information to help us to interpret, right, and identify any reversals in prices. Okay, so this is for overbought, right? So for oversold region, right, it's the other way around. So essentially, when prices enter an oversold region, right, this means that generally prices are depressed. We could be expecting a bounce above this region. Okay, so when prices enter an overbought region, we are expecting prices to go down, right? So we're looking for potential shorts, okay, or to sell. Whereas when it enters an oversold region, we are expecting prices to push higher. Okay, so this is for oversold region. So one more thing that we want to note about RSI is that generally it ranges between 0 to 100. Okay, so this is a range that it sits on. And out of this 0 to 100 range, right, we have set boundaries which we will use to identify overbought and oversold region. Okay, so what do we mean by that? Right, essentially this means that if you were to draw this, so for instance, right, I'm going to load it on the chart later, but this is just an example. Okay, so let's say we set this as 30. So the default setting generally it's 30 and 70, right? So 30 meaning that when prices enter this region, we consider this region to be over oversold. Okay, and then whereas for this region, right, when prices exceed 70, right, or when the RSI goes above 70, this is considered to be an overbought region, right? And like what we discussed just now, when prices enter the overbought region and exit, right, we are expecting a reversal. Okay, of course, this is not 100% accurate, right? There are also false signals that we have to be careful of, especially when the trend, when the prices are in a really strong trend. Okay, so this is the default setting like we have mentioned. So overbought, you see RSI goes above 70%. Oversold, RSI goes below 30%. Okay, so this is what we have, but we also have traders who use the other settings, right? If you want to make this RSI slightly more sensitive so that it doesn't generate as many false signals, right? Or it doesn't trigger as many trades, because you can have a case where prices are in the overbought region or oversold region and it just whipsaws around. Okay, so at this phase, right, you can have prices entering this oversold region, but then at the same time prices are still pushing lower. Okay, so yeah, just something to take note of. So default setting it's 70% and 30%, but at the same time we also have, if you want to make it slightly more sensitive, right, you can consider range, right, of RSI being, so okay, I'm just going to write this. So RSI above 80%, okay, this for overbought, and then at the same time RSI below 20% for oversold. Okay, so you can just toggle between this range, and also different instruments and different charts have different characters, right? So maybe for this criteria for RSI being within the 70 and 30 range, right, this would be more useful for maybe certain charts, right? Whereas if you want it to be slightly more sensitive, you can consider expanding the boundaries, right, to make it 80 and 20 instead. Okay, so yeah, so this is just a brief introduction to RSI, right? So I see that a few people have just joined, right? So those of you guys who just joined, right, today we'll be covering on RSI. So I'll also be hopping on to real life chart examples as well. So if you guys have any questions, right, please just put them under the questions tab. Okay, so yeah, so this is basically what we see on the RSI. Okay, so let me just cover a little bit more in terms of the parameters that we're using for RSI, right? So like what we mentioned just now, default it's 14 period, okay? So depending on where what you are, right? So we don't use 14 day, but rather 14 period. So if you are on the daily chart, that's 14 days. If you're on the 1 hour chart, that's 14 hours. Okay, so this is the default period that we have. Another tool that I use often as well, it's trading view. Okay, so I'm just going to show you guys that later on. Okay, so you can easily set this on trading view as well. Okay, and the values can be adjusted to change the sensitivity, right? So essentially, right over here, just now we pretty much discussed this. So in terms of the values, we can talk about the range, right? So basically identifying the overbought and oversold regions. So if you are looking at, for example, setting this range to be above 70 degrees Celsius, 70 percentage, not degrees Celsius, sorry. Okay, so above 70% and below 30%, right? This is one range that we can look at. Alternatively, right, another popular range that we have, it's above 80% and below 20%. Okay, so these are the two range that we have and potentially we can explore. If you are widening this range, so for example 80 and 20%, right, ideally this would be slightly more sensitive, and we are expecting less signals over here. Okay, so if you're using a criteria that's slightly stricter, right, where the range is slightly wider, right, there is a high chance that RSI is likely to stay within this range, and when it exits, right, this overbought region, or even when it exits the oversold region, right, it can give us slightly more accurate signals. Okay, so yeah, so this is the default setting, but again, right, we can adjust it to make it slightly more sensitive or less sensitive, right? Okay, so we can also lower the 14 period as well. Okay, so lowering the 14 period will increase the sensitivity, right, whereas increasing it, right, would cause it to be less sensitive. The idea behind this, or rather the intuition behind this, is that when you take into account, right, a lesser number of periods, this is when each period will hold more weight. Okay, so yeah, so if you increase the period, right, it is slightly more sensitive. Okay, so traditional levels that we look at, right, this is the one that is determined by Wilder. So the traditional levels of RSI, it's 70 and 30, but again, we can always change it to 80 and 20 to make it slightly more sensitive. Okay, so this can be adjusted to 80 and 20 to reduce the number of signals as well. And for this, right, I'm going to hop on to the examples later to show you guys how we can actually change these parameters and how we can use the new parameters that we've identified to help us to generate signals. Okay, so something for us to be careful of, right, even though we have mentioned pretty much overbought, right, we could potentially expect a reversal, right, and oversold, we could expect prices to push higher after it exits the oversold region. Okay, but as with all indicators, RSI itself, right, just basing it on the indicator itself would generate false signals. Okay, so there's something we have to be careful of, and especially so if we are in an extremely strong trending market. Okay, so for example, what I mean by this is that, let's say, if you have, for example, pound dollar pushing higher and higher over here, right? So we could expect a slight pullback, but you can see that the overall general direction of the trend is still bullish. In this example, you can have your RSI, right? Given that prices are pushing higher, RSI can be constantly in the overbought region. Okay, but this doesn't mean that we could see a reversal. Okay, so while we do keep in mind that RSI, right, being in overbought and oversold region could give us some hint as to where prices might reverse, it is also important to keep in mind the larger time frame trend as well, and the overall direction of the currency pair, okay, or even the stock for that matter. Okay, so do you guys have any questions so far? Okay, so I hope that you guys are clear on identifying overbought, oversold regions and what it means, because afterwards we will hop on. Okay, so let me just cover this. Okay, so this is the parameters for RSI. So basically I got this from TradingView. Okay, we will also hop on to the real chart later on to see this. So just a little bit of explanation on this, right? So for RSI, basically you can see that this is the default setting that we have. Okay, so the default length is 14 period. You can toggle it, right, like what we mentioned just now. If you want to increase the sensitivity of it, you can potentially explore 10 or even 9. Okay, source close, usually it's the closing price. Okay, so these are the parameters of RSI. Again, we can also, so if you go under style, right, you can see that usually, right, this under style, we will also have what we call the upper and lower bound range. So this is where you put the 70 as well as 30%. Okay, so over here, so we have the lower bound and upper bound range. Okay, so with that, right, let me just hop on to the charts, right, and if you guys have any questions along the way, please put them under the questions tab. I'll just open up TradingView, okay, and show you guys this. Okay, right, before that, right, just a little bit more explanation into overbought and oversold regions. Okay, so you can see in this example, let me just grab this. Okay, so in this example, right, you can see here, so essentially how we interpret this, right, the top half of the chart here, right, it's, and this is prices. Okay, so this I took it from the gold daily chart. So this is the chart for gold prices on the daily time frame, and over here, right, it's the RSI. Okay, so this is the goal. I'm just going to write this. So this is the goal, and the time frame, it's on the daily. Okay, so which means that each candle essentially represents a day. Okay, so on the daily time frame, this just means that one candle represents the movement in a day, right? And if, for example, the candle looks like that, right, this just means depending on the color of the candle, it's the open and close prices as well as the high and low. So the wicks would represent the high and lows, whereas the close, right, would represent the close prices, right, the highest and lowest of okay, the open and close prices. Okay, so in this example, you can see here, right? So the first one that we have, right? Can you guys tell me, is this in an overbought or oversold region? Right, just to give a little bit of more explanation or rather more insight into this chart is that this range, right, that we've identified, so essentially this is 30 and this is 70. Okay, so anything within this range means that RSI it's holding between 30 and 70, and if it exits 70, right, this means that it's in it. So in this case, right, this question is that when RSI goes above 70, do you think is it in an overbought or oversold region? Okay, so put your responses in the questions tab. Okay, so you got it, Chandrika, right? So yes, overbought. Perfect, Adam. Okay, so yes. So currently RSI is in an overbought region, right? And like what we said, when prices are in an overbought region, we could expect a potential reversal. Okay, so you can see here, right? Correspondingly, when RSI exits the overbought region, you can see that there is a reversal, right, in prices as well. Okay, so personally, I wouldn't look at the overbought and oversold region, rather I will look at the exits. And the reason for that is because, like you can see in the next example over here, RSI can stay overbought in these regions for an extended period of time, basically. Okay, so for example over here, right, if you look at this point, when the RSI exits, so when the RSI enter the overbought region, this is when it signals a potential reversal in prices, right? But at this point in time, right, we wouldn't want to sell because if you look at where prices are at this moment, right, when prices first entered the overbought region over here, prices, it's somewhere here, right? So it's somewhere here. And look at what happened after, right? Even though prices are holding within the overbought region, right, where we are expecting a reversal in price, see how prices react here, right? When RSI stays in the overbought region, prices are just pushing higher and higher. Okay, so which is the reason why personally when I use RSI, I would look at the exit of the region, right? Because there's always a chance that price would stay within this region for an extended period of time. Okay, so it could very well go like this, okay, and just stay here. Okay, so what I'm really waiting for is when prices exit this region. Okay, so which is this portion over here. So if you look at this portion of the chart, which I've highlighted, right, you can see that this portion of the chart corresponds to the high here. Okay, and after which, right, we saw a reversal over here. Okay, so this is something important to take note of. When you are trading RSI, as much as possible, try to look for the exit of the region instead of just price entering the overbought region and then you just want to go long. Okay, sell. Okay, so you just want to sell. Okay, yeah, so this is an example of what we can see. Okay, so now that we have pretty much seen two examples with regards to prices being, or rather the RSI entering the overbought region, right? Let's try to see examples where RSI entered the oversold region. Okay, so I pretty much gave the answer for this, right? So you can see here, right, when RSI holds below 30, this means that prices are in an oversold region. So when prices are oversold, right, we could expect a potential bounce. Okay, so prices are in an oversold region. So you can see at this point in time, right, when the RSI entered the oversold region, right, next moment it exited. So this point gives us a clue that there could be a potential reversal. Okay, so let's look at what prices are doing here. So at this point in time, you can see that it corresponds to this green box that I've highlighted here. Okay, so what happens is that prices are pushing down. Okay, you can see that generally it's on a strong downtrend. Prices are pushing, it's forming lower lows and lower highs. But at this point in time, right, when the RSI exited the oversold region, we saw a bounce in price here. Okay, so this is another example. And finally, right, the last example that we have on prices entering the oversold region, again, it's this level here. Okay, so you can see here, right? So bear in mind that at this level, you can see that this is a false signal. Why? Because prices entered the oversold region and it exited. And over here, it entered the oversold region. We saw a small bounce in price, right? But it wasn't enough, right, for the change in trend. Prices continue to push lower until it reaches the next key support level that we have over here. Okay, and following which you can see that when the RSI exits this oversold region, this is when we saw the bounce in prices. Okay, so the point of showing you guys this example is because, well, it is potentially RSI, right, just trading purely based on overbought and oversold region works. It is also important to keep in mind other factors that we have as well. So for example, right, graphical levels. Okay, so making sure that when RSI entered, or rather when RSI exit the oversold region, prices are sitting on a key support level, because this means that it will give us a higher probability that prices will bounce from there. Okay, so you can see in this example, right, over here, right, this is a strong support level where price bounce off from. Why? Because previously, right, if you pan out the movement in prices are just pushing, right, it's just pushing higher, but at this point in time we saw a reversal. So what this means is that it was previously respected as a resistance by prices here, right? So prices respected this level as a resistance before pushing higher, right? So when it reaches this level again, right, this is when we saw the bounce that we have. Okay, because this was a level that was respected previously, right? And on top of that, we have other indicators that line up as well. So for those of you guys who are familiar with Fibonacci retracement, right? So I just did a simple retracement from the low. So I took a starting point here to the high, okay, and you can see that this key level that we have, right, just purely by eyeballing it, you can see that it also lines up with the 50% retracement. Okay, so on top of that, we also have our RSI showing us, right, it's echoing the same view as well, where it exits the oversold region. So when you have all these factors that line up, it gives us a higher probability that price will bounce. Okay, so this is one example, and you can see that in the other level that we have identified as well, which is this next key support level that we have. Again, right, so what happens over here, let me just clear all these drawings. Okay, Okay, so I'm just going to clear the drawing so that it looks neater for all of us. Okay, so over here, right, this is another support level that we have. So again, right, similarly, you can see that here, the first exit out of the oversold region was a false signal because we saw a slight bounce here, but then prices crashed through the support. But the next exit, right, gives us more confidence that prices are going to push higher. And this could be attributed to a few reasons, right? So the first one is because you can see just based on graphical level, right? So over here, prices tested this level multiple times, both as a support and resistance, okay? And also this could potentially be a double bottom. Okay, so double bottom is another reversal pattern that we have. And also at the same time, RSI, it's also showing us view that it has exited from the oversold region and we could see a potential push in price. Okay, so this is actually gold from the daily time frame, and if you play out the chart right now, right, you can see that gold has pushed much higher. Okay, so yeah, so some things to keep in mind, right? So apart from just trading purely on RSI, we want to trade on number one, graphical levels as well. Okay, so this, if you have no background in TA whatsoever, right? Go on to a chart, just open up the levels and look at key points where prices reverse off. You can see at this level, right? Just drawing a horizontal line across, it segments this chart very nicely. Right, how so? Because you can see that at this level there was a reversal, so price basically pushed up and reverse of this key level, and we saw consolidation here as well, right? So it hovers about this level as a support, right, many times before pushing higher. Okay, so once prices reach this level again and we have confirmation from the RSI, it gives us higher probability that prices will push higher from here. Okay, so these are examples of overbought and oversold regions. Right, just before that, let me hop on to trading view. Okay, so let me just pull out trading view and I'll also show you guys how we can actually set up RSI for those of you guys who are not familiar with this. Okay, let me just get one of the charts out. Okay, so can you guys see my screen? Okay, so in this example, for example here, let me just okay, let me just pull this out. Okay, so this is an example that we have, right? So let's just see this example. Okay, so essentially what you can do, right, just go to indicators. Okay, just RSI, so you can see that I've put RSI as one of my favorites. Okay, so when you load the RSI, this is the default settings that we have over here. Okay, so this should appear at the bottom of the chart. Okay, okay, so yeah, so you guys can see my screen now, right? So okay, you should be able to see the charts and the RSI. Okay, so how I loaded this is just indicators. Okay, if you don't have it under your favorite, just search for relative strength index. It should be there. Okay, and you can see over here essentially the bottom, right? RSI will appear at the bottom. So this is the indicator. So when you click on settings, right, you can see that this is where I obtained the screenshot from for our PowerPoint just now, right? So this is the length. You can tailor toggle this length, right? If you want it to be slightly more sensitive, you can consider 10 and even 9. And this is the style. Okay, so the upper and lower band, you can determine the range. The default settings is 70-30. Okay, so basically over here 70 is the upper bound and 30 is the lower bound. So this means that when prices enter this region, right, we are expecting it to be, it has entered the overbought region. Okay, so we're expecting a reversal, so correspondingly you can see that there is a push in price. Okay, there was a push, prices pushed lower, right? And then similarly when prices exit this overbought oversold region, right, we're expecting prices to push higher. So again, right, if you refer to where prices are, right, you can see this movement here. Okay, so this is just how we can use RSI for overbought and oversold regions. Okay, so let me get back to the slides. Okay, so just now we talked about how we can use RSI to determine overbought and oversold region. But along with all this, right, I have also mentioned that we need to be careful of false signals, like in this example, right, where we saw that prices exited this oversold region. But what we are looking at here is that we are still expecting prices to push lower. And the reason for that is because it has yet to reach this key support level that we have here, and it broke the previous support level. Okay, so the next slide, right, will give us a better explanation, or rather a better understanding of when RSI could potentially produce false signals, which is also why it is important for us to keep a lookout for other technical indicators or even other levels that prices are sitting on. Okay, and also more importantly, what is the general direction of the market in terms of the trend. So in this example, right, we can see over here. So here, right, so over here, we can see that RSI entered the overbought region, and then we saw an exit of this level. So what happens after is that you can see that prices pushed lower. Okay, so this is okay, this is good for us, right? So this is the signal is right. Okay, again here, okay, so if we focus on this portion of the chart, you can see that prices entered, okay, and exited the region. Okay, but what we're looking at over here is that when prices entered and exited the region, we barely saw a reaction in price. Okay, there was more of a consolidation before prices pushed higher. Okay, so at this point in time, right, when prices exited the overbought region, okay, we saw the reversal that we're expecting in prices. Okay, but what I would see as a false signal, you can see this example over here, right? The reason why I would say that this is something for us to be cautious of is because you can see that when prices entered the oversold region, or rather the overbought region, sorry, right, because it's above 70, so it's overbought, we are expecting a reversal in price, but correspondingly, the drop that we are seeing in price, right, it's a little underwhelming. Okay, so it's slightly more disappointing. So over here, right, when prices exited, or rather when the RSI exited the region, okay, we saw just one candle, right, that's bearish, and afterwards prices actually continue on its uptrend. Okay, so this is a useful example for us because it highlights the importance of other levels that we need to watch out for. So for example, like prices are still holding above this ascending trend line. Okay, so if anything, right, if we see an exit of this RSI from this overbought region, right, ideally we want to wait for a break below the trend line as well. Okay, so if you see an exit of this and you see a setup like that, right, given that prices are still holding above this ascending trend line, right, what we want to wait for is a break below the previous low, which is this level here, as well as a break below this ascending trend line. Once prices break below this ascending trend line, right, it gives us the confirmation that it could indeed push lower. Okay, so while RSI can be useful in helping us to identify these reversals, it is also important for us to keep in mind other factors as well. So for example, like prices are sitting on this key support level, you saw that there was a resistance previously and prices broke this level, and right now it is sitting on it as a support. Okay, so keeping in mind all these factors along with the ascending trend line, taking this could be a risky shot, right? So if you do want to take a shot like that, right, ideally wait for the break below this trend line. Okay, so this is what I mean by combining other factors, right, apart from just trading purely solely on RSIs. Okay. Okay, Edward, I have a question from Edward. Will you use two RSI settings at the same time to better analyze the situation? Okay, so Edward, if I understand correctly, you're looking at toggling the period, right, between a more sensitive one and a less sensitive one, and looking at crossovers. Is that right? So potentially maybe like a 14 period RSI and let's say a 9 period RSI, right? And then look at the crossovers. So okay, let me just load an example on that, right? So yes, you can do that, but personally I don't use the two RSI periods, or the two settings, okay, to analyze the situation. Okay, I look at other factors, for example, whether prices are sitting on key support levels or even key resistance, and use the RSI as a breakout or confirmation. Okay, but yes, you can do that, Edward. Okay, so let me just bring out the chart and we'll show an example of this. Okay, let me just this up. Okay, okay, let me just bring this up, right? In the meantime, can you guys see my screen? Okay, so let me just bring up the, okay, not now, yes, okay, let me just bring up the chart first. Okay, so thanks for it, Chandrika and Adam. Okay, so let me just bring this up. Okay, so if I understand correctly, right, I think what Edward is saying is that we can use a different RSI settings. Okay, so in each settings, you can see that this is the length. Okay, so if you toggle, for example, let's say if you toggle 9, right, it can be slightly more sensitive. Okay, so you can see in this example, right? Okay, so in this example over here, so this example, you can see that when I toggle to 9, right, prices are giving. So okay, let's just see this, right? You can see this over here. We can see like a head and shoulders pattern on the RSI here. Okay, so this is for 9. If you go on to 14, you can see that this changes. Okay, or rather, okay, let's see. So for example, okay, so you can see that when you go on to 9 or even just as lower settings in general, right, you get much more signals, right, of prices entering and exiting the overbought and oversold regions. Okay, whereas if I go on to a higher period, so for example, even right, okay, you can see that overall, right, the number of crosses, right, which exits this purple boundary that we have, okay, it's relatively lesser. Okay, so if you use a smaller period, right, generally it's slightly more sensitive, whereas on a larger period, okay, it's less sensitive. Okay, okay, so yeah, so this is what we have on the RSI. Okay, so over here. Okay, so the next part, all right, of RSI. Okay, so the two RSI settings. So generally, to answer your question, Edward, I would only use the default. Okay, so I go with the default setting of 14 over here, and I look for other indicators as well that could give us an idea of whether prices are going to reverse or not. Okay, so yeah. So for example, right, you can see in this example as well, where when prices or when RSI exited the oversold region, right, we're expecting prices to push higher here. You can see at the same time, right, this level, it's a graphical level as well over here. And if you do a retracement of the move, right, you can see that it is also holding above this 50%, rather than 61.8 retracement. Okay, so yeah, so this is something that I use often as well, right? For those of you guys who are familiar with retracement levels, but in general, right, even the general trend, it's still bullish for us. Why? Because even if you just base it on purely just looking at the general direction of the trend, right, you can see that prices push to form lower lows and lower highs, right? But at this point in time, when RSI exited the oversold region, right, prices have broke the previous high. Just looking at the structure of the market, it broke the previous high and right now it pulled back, right, to test this level before bouncing. Your RSI is also giving you the confirmation that it has exited the oversold region, so it gives us more confirmation that we could be seeing a potential reversal. Okay, so yeah, so this is how I would use the RSI over here. Okay, so in this example, you can see again here, right? Once again, prices exited the oversold region, right? So we're expecting a further push up, but at this point, right? So let me just remove all of this. So at this point in time, when prices exited the oversold region, where we're expecting prices to push higher, okay, if you are playing or taking a long position, I will also keep in mind this descending trend line as well. Okay, as well as the previous high. So if you zoom out, you can see that there is no support level here. Okay, prices are just pushing to form lower lows and lower highs. So this is why at this point in time, even if I were to take a long position, I wouldn't consider playing past this level here. Okay, you can see, I think if you zoom here, same thing. If you take a retracement of the move, you can see over here. Okay, so 50% of the move, so I wouldn't play it beyond this level because it is also in line with the descending trend line. Okay, so when you use RSI, right, as much as possible, try to combine with other factors. Okay, look for a break of the structure. So for example, the previous high. So in this case, if prices are pushing and they're under bearish pressure, right, wait for the break of the previous high. And when RSI gives you the confirmation, there is a higher probability set up there. Okay, okay, I received a response, Ugo, right? But I don't understand. So can you type it in English, please? Okay. Okay, so back to our slides. Okay, so the next example, right, that we'll be covering on RSI is actually on the RSI failure swings. Okay, so the failure swings, it can be classified into failure swing tops. Here, okay. So an example of a failure swing top that we have, right, essentially on RSI, this is how it looks like. Okay, so RSI is pushing, right, to form highs, but the next high that is formed by the RSI, you can see over here in this example, right, it's actually it doesn't exceed the previous high. Okay, so this is what we will term as failure swing. And when prices break, or when the RSI breaks below the low, right, this is the failure swing point, and it gives it basically generates signal for us to sell. Okay, so this is the next slide will show us an example of how the failure swing would look like. But essentially over here, right, it's a description of how the failure swing happens. Okay, so over here we can see price makes a higher high, but the RSI fails to make a higher high, and it will fall below the recent swing low. So you compare these two highs that we have. Okay, so you can see that prices actually fell below the previous high. So this is the first indication that there is a potential fail point. Okay, the second indication that we have is that we look for the lows. Okay, so generally in an uptrend, if RSI is pushing higher, it should be forming lower lows and lower highs. Okay, so when it fails to form a lower high and it breaks below the previous low, right, this triggers a sell signal here. Okay, so more importantly, right, we can't really see this on this chart, but more importantly, we want the first high of the RSI to go beyond 70, okay, or any number that you have identified to be an overbought region. Okay, if you use 80 as the criteria, then 80 would be the criteria you want to use here. Okay, so more importantly, we want RSI to enter the overbought region and exit from there. Okay, so the indicator over here, you can see that at the previous high, right, prices entered the 70 region, which is the overbought region, and exited. So this is also an indication that we could see a potential reversal. Okay, so this is an example of how it looks like. Okay, so you can see here, right, in this example of a RSI failure swing that we have. Okay, so essentially what happens over here is that you can see that prices are making higher highs. Okay, so higher highs, I'm just going to draw out the highs. You can see that this is the first high that we have. This is the second high that we have, and this is the last high. Okay, so you can see that prices are forming higher highs. It's forming higher lows as well. Why? Because over here, this is the first low, the second low, and the third low, right? So if you look at the horizontal lines that we have drawn, right, you can see over here, right, generally the highs are higher, and similarly the lows are higher as well. Okay, now let's look at what we are seeing on the RSI here. Okay, so RSI is reflected at the bottom of the page. So over here, right, you can see in this example, RSI entered the overbought region, right, because it exceeds, right, it went above the purple boundary that we have, and this level is set at 70. Okay, so essentially RSI entered it surpassed 70, so it is currently in the overbought region, right? And at the same time, prices are forming higher highs and higher lows. Okay, but what is interesting over here is that the next high that we have, right? So this failure swing that we have, look at the next high. So the next high that we have over here is actually lower than the previous high. Okay, so you can see here RSI makes a higher high, and the second high actually falls below the previous high. That's the first criteria, or rather the first indication that we could see a potential reversal. The second indication that we have is that RSI breaks below the low, right? So you can see over here it's annotated in the black, right? This black circle that we have. So essentially this is the previous low, right? So what we're seeing over here is that the RSI actually broke below the previous low that we have here. Okay, so this is the second hint that we could see a potential reversal. And the final hint that we have is that we want the RSI to exit the overbought region, right? So if you can see here, right, in this example, when prices are pushing to form higher lows and higher highs, RSI is actually forming lower highs, that's one. And more importantly, at this point in time, right, so let me just remove all of these drawings so that we can see this clearer. Okay, so at this point in time, what is important is that here, at this point in time here, prices actually exited the overbought region. Okay, you can see here it exited overbought region. Correspondingly, when we saw this, right, that is when we saw a reversal here. But again, right, even though prices pushed lower here, what is important for us, again, right, I've mentioned this over the course of this presentation, is that we also have to keep in mind other factors, okay, which means that we cannot say that when RSI exits this, right, we will be shorting, right, and putting, for example, an open target. Okay, it's also important that we keep in mind the other factors. So you can see in this example, this is a really strong support level here, tested as a resistance twice. Okay, so if we do play, or rather take a shot in this, right, it is important to keep in mind that we don't play beyond this level. Okay, so when price breaks below this level, I can consider taking another position, but until then, right, this is a level that would be a strong support level for me. You can see again, if I do a retracement, right, it's a 9 of the 50% retracement, but more importantly, just based on graphical level as well, right, you can see that prices has respected this level as a resistance twice here. Okay, it's a very big level because we saw a strong reversal here 2 times. Okay, so right now when prices broke this level again, right, it could sit to test this level again as a support. Okay, but yeah, so this is what we can see in terms of the failure swings, right? So we have three confirmation over here, but again, right, while we do have the confirmation, do keep in mind as well the graphical levels that you see on the chart, okay, because this we can take a short position, right, but we need to know where to place our take profit target as well. Okay, so this is an example of a RSI failure swing that we have. Okay, so in this example, right, it doesn't show over here, but just to cover a little bit more on RSI divergence as well. Okay, so let me just remove all of this ink on the slide, and you can see in this example, so essentially, right, a brief of the bullish and bearish divergence that we have, right? So for bullish divergence, prices are basically forming lower lows and lower highs. Okay, so it's pushing lower. You can see that prices are in a downtrend, right? So bullish divergence happen when the RSI is actually showing a divergence, right? Essentially, it's signaling that we could see a potential change in trend. Why? Because RSI measures the momentum, right? So at this point in time, when prices are pushing to form lower lows, right, and RSI is actually pushing higher, right? So you compare the lows over here, right? This means that the bearish momentum could be slowing, right? So this is when, if you see that there is a strong, for example, there is a strong support level over here, and prices are pushing lower to this level, okay? And at this point in time, so this is price, and at this point in time, RSI is actually exiting the oversold region, right? And it's also forming higher highs, right? So this is what we will call a bullish divergence, because if you look at the high, you can see that prices are pushing to form higher highs. At the same time, your RSI is pushing to form higher highs, and then price at the same time, it's pushing to form lower highs, lower lows and lower highs. Okay, so this is an example of a reversal that we have. Okay, so let me try and see if I can find an example on the chart later on. Okay, so this is an example of a bullish divergence. So conversely, right, if we have a bearish divergence, okay, so in this example, we can actually see a bearish divergence as well. Right, so bearish divergence happen basically when prices, right, so when you look at bearish divergence, you want to compare the tops. So essentially, RSI, right, so price is still pushing higher, okay, so it's still forming higher lows and higher highs. Like in this example that we saw, right, prices are still pushing to form higher lows and higher highs here. But look at the RSI. So RSI is actually showing that there could be a change in trend. Why? Because if you look at the highs of the RSI, you can see that it is actually pushing to form lower highs. Okay, so as the name suggests, right, there is a difference, right, or rather divergence in the movement between prices and the momentum indicator. Okay, so in this example, right, apart from just seeing the failure swings, we can actually notice the divergence in the RSI as well. Okay, so where essentially prices are pushing higher, but RSI is showing you that the momentum could be slowing. Okay, and we could see a potential reversal. Okay, so we witnessed that over here. Okay, so this is an example of a RSI failure swing. At the same time, it's also a combination of the bullish and bearish divergence that we see. Okay, so in this example, purely, right, this would be an example of a bearish divergence. Okay, so apart from that, right, we also can use RSI to use determine whether we have bullish or bearish breakouts. Okay, so let me just change this. Okay, so let me just hop onto the charts, right, and I'll show you guys the breakouts that we're expecting in RSI. Okay, so for example, right, so you can also draw trend lines on RSI as well, right? So in this example, let me see if I can find a good example. Okay, so for example here, okay, so RSI, again, it's a momentum indicator. So you can see this example, right, where basically prices are forming. So for the RSI, prices are forming higher lows and higher highs. Okay, and this trend line corresponds to the movement here as well. Okay, so at this point in time, right, when we saw, okay, so if you highlight the lows, you can see from this chart alone, right, the lows will be here. These are the lows. I'm just going to highlight the lows. Okay, so at this point in time, right, where we saw the breakout of the RSI, right, where essentially prices broke the trend line. Okay, so you can see, let me just zoom in. Okay, but in this example, you can see that here on the RSI, right, there was a break. Let me just change the color of the ink. Okay, but essentially here, right, there was a break of the trend line. This level has been tested. Okay, so there was a break and a retest of a trend line, and you can see that, right? Similarly with prices as well, prices actually broke this ascending trend line. More importantly, it also broke the previous low, right? You can see at this point in time, right, where prices broke the low, right? It broke the second low that we have, okay? So this gives us confirmation that prices could push lower, okay? And so just in terms of looking at the trend line, you can see that it broke the ascending trend line, it broke the structure, and also on the RSI, right, it is showing us a bearish exit or a bearish breakout, right? So prices broke this ascending trend line. So this is another way that we can use the RSI to help us to identify a change in trend. Okay, so this is an example of a bearish exit. Let me try and find an example of a bullish exit. Okay, so bullish exit, it's usually the other way around. So for example, you can see this example very clearly here, right? So you can see here, okay, so this is a bullish exit. Why? Because prices are actually pushing to form lower lows and lower highs here. You can see that it's pushing to form lower lows and lower highs. But at the same time, okay, you can see here. So when RSI actually broke the high, okay, it broke the previous high. And you can see with so this is gold, right, on the 1 hour. You can see that this level, this trend line that has been respected many times, okay, 3 times, 4 times, 4 touches here, okay, and right now we saw a clear break above the descending trend line. There was a pullback to retest this level as well before pushing higher, and correspondingly you can see that on the RSI as well, okay, we saw a break of the descending trend line. Okay, so this is an example of what we can term it the bullish exit. Okay, so basically, right, in this example, right, oh, that's bad handwriting there, but let me just type this. But yeah, this is an example of a bullish exit on the RSI, where we saw that prices no longer respect this descending trend line, and it could signal a potential reversal in trend. And if you see gold prices right here, right, you can see that prices are pushing higher, but also interestingly, it is sitting on a very big level as well, right? Just remember, just now I was talking about the graphical levels. You can see this level here is it has been tested as a resistance. Prices set on this as a support, right? 3 times here. And right now where we are looking at, you can see that there is a double bottom that is formed. Okay, so double bottom is another reversal pattern that we have on gold. And also on the RSI, it's also showing us that there is a bullish exit here. Okay, so you can see the RSI broke its previous high. Okay, it broke its previous high, it broke its descending trend line as well, and this corresponds to what we are seeing in price action here. Okay, so you can see this trend line, descending trend line, prices broke and retested this level here. Okay, so this is how we can use RSI to help us, right, with our direction to determine the breakout. Okay, at the same time, it also helps us to identify potential change in trend, right, in terms of reversals. Okay, but personally what I would do, right, again I want to emphasize is that I would wait. So if prices are in the overbought and oversold region, like in this example you can see over here and here as well, right, prices can be in an overbought region or oversold in this case overbought region for an extended period of time, right, but it doesn't reflect a reversal. Okay, more importantly we want to wait for an exit. So if it does enter the region, right, an exit would be the first signal as to the change in trend. Okay, so do you guys have any questions so far? Okay, so if you have any questions, it can be on RSI or any charts that you want us to look at. Okay. Okay, so if you guys have any questions that are on RSI or any charts you want us to look at, please put them under the questions tab. Okay, if not, I'll hop on to another example that we can see on RSI, right, and potentially help us to identify any divergence level that we can find. Okay. Okay, so I have a question by Tom Hing. What is the difference between RSI and stochastic? So RSI and stochastic, they're both oscillators. Okay, so they have a range, right? So for stochastics as well, they have overbought and oversold region. But in general, stochastics is used more in a ranging market. Okay, whereas for RSI, it can be useful in the trending market because you can also use trend lines on RSI. So for example, like the one that we discussed just now. Okay, so for example over here you can see that RSI or even this I'll just use the same example. You can see here, right, on RSI as well, right, it helps us to determine bullish and bearish exits. For stochastics, right, it is more useful when the market is trading within a range. Okay, so yeah, in response to the question, Tom King. Okay, so while I wait for any questions that you guys might have, right, let me just try and find if we have a bullish divergence. Okay, I do want to show you guys on a bullish divergence. Okay, so let's see. Okay, so if I do see a bullish divergence, right, I'll just raise this up. Okay, so if we do see that, yeah, okay, so this is a good example. Okay, let's see. So over here, right, so you can see this bullish divergence here. Okay, so I'm on the daily time frame, so it might be slightly small, but if you zoom in onto the 4 hours, it'll be clearer. But basically what we have, right, so the idea of bullish divergence is that, okay, so the idea of bullish divergence is that prices would form lower lows. Sorry, yeah. Okay, so this is a good example as well. I think I missed the previous one. I don't know when, but yeah, this is an example. Okay, so basically for bullish divergence, you can see that prices, you look at the lows, so prices are pushing to form lower lows, right? Whereas your RSI is showing that there could be a potential change in momentum. Okay, so when this happens, right, and it exits this oversold region that we have, it gives us the confirmation that you can see here when it exits, right, it pushed higher, and afterwards, right, prices set on this level as a support before pushing higher. Okay, so this is an example of a bullish divergence where basically there is a difference in terms of price movement, right, where prices are still pushing lower, still holding below the downtrend, but the RSI is showing you that there could be a potential change in momentum. Okay, this was the one I was trying to highlight just now before the chart disappeared, but over here you can see again, right, just draw out the lows, you can see that prices are forming lower lows, but look at what the RSI is doing, right? It's showing you that there is a change in momentum here because prices fail to break past the lows and it's in fact forming higher lows. Okay, so these are examples of bullish momentum, bullish divergence. Okay, and they can be very useful in helping us to identify reversals. Okay, so again, I want to emphasize that don't just trade purely on bullish divergence. Okay, so in this example, again, you can see here. Okay, this is not a good example. Okay, but rather, let me just remove this. This is not a good example, but yeah, the previous two that I've highlighted, you can see these are examples of bullish divergence. Okay, so use this overbought, oversold regions, the exits of these regions as further confirmations for a change in trend. And you're very welcome, Tong Heng. Okay, so yep, so I think those are all the questions that we have for today, right? So it's always a pleasure to be with you guys. Okay, so thanks everyone for today, and I'll catch you guys again next week. Okay, so thank you and goodbye.